Hello, good morning, good morning. Welcome to another video of ES Futures Trading. Today is Thursday, August 10th. It is 8:32 a.m. Eastern Time. We just have the release of CPI. I did not see the CPI, but it looks like it's how we have a good number. Judging by the reaction of the market, this seems like it's a good number. Let me open. Before I talk anything, what I'm doing here is just watching what the market does. We have a spike to the upside. The base of the spike is this is the base of the spike. Let's put this one on blue. The most positive reaction would be the market opening above this spike. It means up opening somewhere up here. The most negative reaction would be the opening or the market opening below the spike, which will be somewhere down here or down here. As you can see, I mean, it's going to take time to see where the market is going to open. We are just 8:33. We are still like 2 periods before the opening. 2 full periods before the opening. 1 hour. All that time I have to wait. Just watch and observe. This trading here in this kind of environment, what's happening now is going to. It's not that. It's not easy. It's very risky actually. What the market is doing now. The market took this high, take back the overnight POC, yesterday's POC. And it's very low. There's a rejection on these prices so far, but we are still sorry, we are still 4 minutes into this number, into the release number. This is weird here. I don't know what happened here. What I was doing, I was just playing. I replayed myself for myself here. Because when I woke up, I saw this gap here. I don't know what the heck is going on there. Did it really happen like that? For example, I have BB, UB, you still have more time here. I'm just curious to see what's happened here. But it can be maybe I lost connection somewhere in here and it just opened. But yeah, because it's one thing the market goes all the way up, it's really slow, and another thing is just boom, in a fraction of a second, going all the way up to here. This seems like this is the European opening. X. What is X here? X is 3:30, the first period of the European opening. I'm playing full speed here. I'm just curious about that. Can you see what's happening? This market came all the way down to here, to the base of this period. Okay, we're close to that. Very close to what. I want to see what happened here. Okay. W. Oh, oh, that's one full period that I miss here. What the heck? What the heck happened here? This is short covering. What I can see here is short covering. I can see this um, yesterday. What we have yesterday. It was a nice thing. It was, I mean, the opening, right? The trade was before the opening. I guess I went short somewhere up here, B24, something like here. And this day had multiple weak references in the low side. And all this reference, this, cut CDs, this is half back, non-access here, everything questionable, very questionable. What I can see here, this is what I saw yesterday. Oh, come on. Value here is lower, alright? Value is lower. And not matter what happened, no matter what happened with the market was somewhere in here, no matter what happened, value was going to remain lower. Unless the improbable event of having a huge rally that took this high, this previous day high, that was the only thing that could move value, at least to overlapping. It just didn't even get back inside. It got back inside, but value was way lower. And liquidation happened next day. All this long inventory here. Liquidated here, and market got too short because we also have long inventory, 100% long inventory here, and you can see where this market was bought, like 1, 2, 3, 4, 5, 6, 7, 8, 9 times from this level. 1, 2, 3, 4, 5, 6, 7 times from this level. 1, 2, 3, 4, 5 times from. I mean, super. This was one of those days that you have things kind of a little bit clearer here. Yesterday, the development was, I was. There's a lot of congestion yesterday. There's a lot of congestion, and the break started exactly to the tick the halfback. Come back, check this one out, and then liquidation that follow. And this is just short coverage again, the overnight short coverage. Again, we have 100% long inventory. The market didn't check. The overnight open and boom. Is this my replay? No, this is real time. Okay, this is my replay. Okay. This is weird here. Oh yeah, I got double high. I didn't see that double high here. Huh. Okay, we saw that. We saw it here. Okay, now look at what this market is now. What I'm going to do, I'm going to open this again because I don't like. Now, let's check where the market is at right now. Because this is, we have, let's see, what's happening with crude, for example. Let's check first the daily. Crude is in rally, dollar is in range after a short covering, it's trading in range. Gold, I guess it's been sold from 2000. And bonds are out there. Bonds are in range again. Look, after this spike, after the spike to the upside, it has retraced almost the whole, pretty much all of, no, look at these lows. Lows here. Can't take these lows as well. The dollar has a big break and then has recovered. Gold again selling from this big. Okay, and where the market is at right now. The monthly, there's no change in the monthly. It remains as an inside bar. Granted, we are just 10 days into the month. We have more. We have like about 3 more weeks to go, on the monthly. And look at that. The end of the month is Thursday. It's almost falls on Friday. Almost Friday. The weekly, market is being bought from this trend line here. I just can't pull this trend line here. And now you can move it down here. You know how exactly this is being bought here. Put this. I'm going to put, okay. Let's put it back there. Should I put it there? Yeah, I'm going to leave it there. No, I'm going to put it here. I think it is better. 1, 2, 3 here. The 4,500 as a support. A very mechanical way to trade here in the weekly. Now the daily. Let's check this on bigger times. No change in the monthly. The market is rallying. After the market break out of this range, we have an inside bar here. Say we still have 3 more weeks to go before the end of the month. This can very well come up here or down here. If it comes down here, the question would be if it re-enters this range. Okay? And can this have downside continuation, or is going to look below and come back upside? Those are the situations. There's analysis in the monthly, in the bigger time frame. This is a trend line here. The more the market trades from this trend line, the more mechanical it is, the more unlikely the success of that. You have this. Oh, look at this. Okay. There is a lot of money that has come back inside the market. The question is, will it keep coming in the way how it was coming? The daily is at this critical level here. Oh, look at this. The 50 is right there. 50 is 44.62. 44.62. What is 44.62? 44.62. 44.62. Right here. What do we have here? We have last pretty close. It was not bought from the basis. All of these longs here, all these shorts here have been removed here. They were forced to cover. This is short squeeze here. Now, these longs, all of these longs here, notice where the market is being bought. We can say maybe you have 1, 2, 3, 4, 5, kind of close. Man, what the heck is happening here? I still can't. What? No, I don't know what's happening here. My solver is not working that well today. Never mind. Okay, let's go back to the daily. The 50 is very close, but look at this high here. There's no excess here. A little bit of excess here. The thing here, this is the thing that I can see here. There's no excess here in the high. No excess. They have good excess here, but no excess relative to March last year. It's far back. It's far back in time. But from the market, from market profiles, this high was made. This high was made in the overnight. That's one thing. And the other one is we have a big gap here. We have one range here and another range here. This market has taken the 4,500 three times now. 1, 2, 3 times. One of these times is going to take, it might take the 4,500 and don't look back again. Or it cannot take it and don't look back again. It can just open somewhere in here or test it here and then keep going to the upside to repair this high. Or it can come here and be bought from the 50 and keep going higher. Or be bought from the 50 and the next day, boom, trade towards the opposite side of this range. This is not a gap for me. It's the rollover, contract rollover here. There's no volume here in the current contract. You have like, 50,000, something like that. And the next day you have like 1 million here. This level is key now for the market. The market is respecting it. I guess the same thing happened here. I guess was the other one was the 4,100. What level is this? 41, yeah. 41 happened with the 41 multiple times here. Took it back a couple times and then boom. This level at 4,100 is super weak here. Look at how many lows we have. 1, 2, 3, 4 times market was bought. This is super questionable. In the same way, if you want to use some reference to check this, I would do the day before yesterday this low. Look what happened with the traders that bought, with the overnight traders that bought here. 1, 2, 3, 4, 5. Okay? This happened in all time frames. Now you can see this over here. What it is here. The thing is, since this is a daily, it took long time to develop, right? Instead of being every 30 minutes, is every day, right? And if this low has take 3, 6, 9, 10, 12 days to form, and then you have the development, how long is it going to take for the market to come back down here? It's not going to happen in one day, right? You have to use, that's why you have time frames. Okay, I get that. I want to close this. Look at this. Now we have a spike to the downside. We have a spike to the upside. The first reaction was a spike to the upside. Okay, now where the market is going to open? It's going to open down here. It's going to open up here. It's going to open up here, or it's going to open at the center. Opening at the center, advertise chop. The closer to the center, the higher they also chop. The center relative to the previous day. And it is the market. Look at this as well. just to have in mind. Do not forget about context. We have a range. How big is this range? 1, 2, 3, 4, 5, 6 day range here, or this range here. You have this range here. And inside this range we have this one. We have 2-day balance here. You have yesterday and the day before yesterday. We have what is the direction of the market? What direction the market is having now? It's to the downside, right? What is this? This is an inside bar. What's the resolution of the inside bar? To the downside. Has the market took the downside bar, the resolution bar high? It hasn't. It did have downside continuation here yesterday, but this is a balance in a market that is going to the downside. The traders go with the breakout balance. This is balance inside bar, the resolution was to the downside. But that's not the only thing that is happening, right? Sometimes we just lose context when we focus too much in just one thing. The thing here is we have the resolution of this bar, this breakout, this inside bar, breakout of the inside bar. But what happened with the market? The market re-enters this range. The market re-enters this range here, which is quite a big range actually, like 20-something days here. And when the market trades back inside this range, the destination is the opposite side of the range. It may take time, but this is the destination if the market re-enters this. If the market looks below inside this range and fails to have downside continuation, I will start to look the opposite side of the range actually, which happens to be another range. It was this one. I don't put it here. It was this range here. It's coming back. Coming down. I put this one inside this. It's coming down. I am leaving this opening so you can see what's this. This is another range, right? Inside the bigger one. And another one, perfect balance now here. The market re-enters here and is rejected. I will see the opposite side of the range. What's happened is the market re-enters. There's a breakout of this inside bar, re-enters this range, which is something completely different. It has a bigger scale, a bigger time frame. And also, we have this important level here, relevant level here, 4,500. 4,500 is not the same as the 46. It's not the same as the 44. But there's nothing here and there's nothing here. But this happens to be something. Same thing that happened with the 41. And there is something here. Okay, it may take time for the market to take this level and fully go through this level until it gets back inside, and then we have you have downside continuation. It may come back to check the high this time, and if it fails, the trade is to the downside. Because the more the market tests, the more the market gets. How many times this market has now come back inside this level? 1, 2, 3 times here, going in here. It may very well happen also that the market next time is just going not, it doesn't check this one and go to the upside. What's going to happen? I don't know. And the thing is that nobody happens here. Nobody happens what's going to happen. And that's what kills traders. Right? We tend to think that something will happen. Instead of focusing on what is happening, we start to focus in what will happen. Because I'm going to upfront the market. This market will break. I'm going to be short before it breaks. I'm going to make a lot of money. the market is going to reject the 4,500. I'm going to be long before that happens. So I'm going to make a lot of money here. So instead of focusing on that, let's focus on what the market is doing. Instead of trying to guess, if I'm going to do any guess, okay, I cannot guess. I mean, where do I have better odds about? Let's guess, for example, where do I have better odds? Trying to guess what will happen or trying to guess what is happening. I have information that the market is giving me all the time. And I can use that information to try to figure out what is happening. And I think the most important thing is who is doing what. Right? That is the thing that can increases the odds of success. Whatever I do can give me good odds if I can figure out who is doing what. In the last couple of days, we have this balance here. We have this perfect balance. Hold on. I'm going to reduce. Okay, we have this perfect balance. Okay. Remember, this is a range. This is a range that has formed after the breakout of the inside bar. The market is still going to the downside. Look at the trend, right? And continuously for 4 consecutive days. And that has given, the market has formed a perfect balance, 2-day balance here after a breakout. After a breakout of this inside bar. Notice that there's no excess here on the upper side. We have a gap here and questionable high here made in the overnight. That's a nuance here to me. I have not forget about the high here that was made in the overnight. The market is getting closer to the 50 SMA here, right? The 4,500 is right there. I forgot what I was talking about. Gosh. Where can I contact you? Can you please remain until or put me this? My user is Simone Buse. Hey, Phoenix Traders. How are you, man? I'm sorry I have just saw your text message, brother. If you want to contact me, I will message you. That's okay. I have a Twitter account. I have a Twitter account that is. Oops. Oh, wait a minute. I don't know what I have done here. Oh, okay. This is it. This is my Twitter account. It is my E-mini SP500. I guess I don't. I am old man. What about if I put this E-mini? It is the same? Yes, it is the same, right? Isn't it? Yeah. This is my Twitter account. You can reach out here. You can post it. My name is Victor. Okay. And I put, I don't do this as a business because I am a trader. My business is trading. I used to do a lot of streams, a lot of streaming in Discord, not in Discord, in Twitch, to help me to keep focus in the market, because I used to get distracted very easily. And the stream actually helped me to keep my focus. But with time, what happened is that it was getting in the way now. It was getting in the way and it started to distract me. Actually, I was losing, I was missing opportunities. I was missing too much opportunities, and that's why I decided, okay, I have to do something there, something here. The thing is, the thing is, when the thing is when you identify a problem, we have to do something about that. We have to do something about that. And trading is solving, problem solving. We are always solving problems here, all the time. Because the market is not the same. It's not the same. The market, there was change in this market, for example. The market changed. I have noticed that the market changed here, somewhere in here. Okay, this market is completely different now. That was before this. Okay, if you look back before this line here, if I can draw a line, I would draw a line here, and this market is different, and that happened. What happened? And the previous market also was different from something, I would say, maybe the past 3 months up before, somewhere between 4 months before. And what I was checking, for example, if I'm going to use a daily time frame, there was a change. This was, let's do this. Come on. There was a market, I would say here, there was one, this market did, there was another market here. And here it gets shorter. Somewhere like this. Kind of like coincide with the contracts, right? Somewhere here. All right. One market, another market, another market, another market. I can see how different the markets are. Did you feel the difference between what's happening now, for example, versus or relative to what happened in this time? If we are going to trade this market in the way how we were trading here, the odds of success, are not that good. We will start noticing that our performance decreases. We start to have more losses. But we have to adjust. We have to adjust all the time. And we have to make these adjustments as the market develops. That kind of situation happens also in the intraday. I am a short time frame trader. Okay, I trade the intraday, but I have to keep a perspective. I need to see what is going on before I try to remember what happened in the past versus what's happening now. Because what is happening now has a lot to do with what happened before. All right. These 2 days, for example, coming back to what I started, all that blah, 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 these 2 days here are very, very mechanical, very, very questionable, very small traders, very short time frame traders here. And the way how you trade, and this is a market, the easier you can read the market, the more likely that the dominant force in that market are the short time frame traders. And how you trade that market is different how you trade a market that where the dominant force are the bigger time frame traders, which is what happened here, you know. You, I remember this market where all started down here in this area. I guess it was a change when new contract started. After a long liquidation, we have something going on here. There was a change of contracts. All the loans were, the market was going to the upside here. All the loans were liquidated just before the contract expired. And after the no contract was full in play, the market never looked back. This is what Jim called the pain trade. Now, coming back to market profiles, what happened yesterday and before yesterday, we have relative high volume. This was like 20% higher than the previous day. But notice this day here. But notice how low was the previous day to that day. It has a really high volume relative to the previous day, but it was lower than Friday. It was lower than Friday. There's something to have in mind as well. Something to have in mind here. And what makes me remember this, what I am thinking of this is when I can't avoid to remember when Jim talk about this market and say, remember the pit. Just remember the pit, the open. When there were pits, what happened when you have a lot of traders, right? The small traders that were trading there, and they were just buying, and somebody bigger, the bigger traders, institutional trading, just can feel or can see how long or how short the market was getting. And if there's a lot of shorts in the market, what can you do? If you have the power to sell, for example, if the market is too long, or to buy, the market is too short, you will force those traders to cover or to liquidate, depending on what is the case. A lot of what we do here has to do with inventories. Inventories getting too short, inventories getting too long. Long liquidation here, short covering here. Where is value? What happened to value, for example, after this loading? Value was down here. Yesterday we have value. This is the important thing, okay? After this brown liquidation that we have, where value is. POC was moved closer to the center, but what happened to value? Value is higher, not higher, overlapping to higher, relative to the previous day. So there's some buying here. And yesterday was some selling. POC moving lower, POC moving higher today, yesterday. But can you see? And that is the very short time frame trading. But let's put things in context. Let's put that in context. Because what happened is we have to do our homework. Okay, we have to do our homework. But homework is for it gives you context. Okay? My homework, and I do this every single day. This is my homework. I try to observe the market and watch it. I don't write too much. Most technical stuff, sometimes, I can notice, for example, today highest question, but when you write, what happens is we are looking too close. when we are trading, when we are in the intraday, we are just looking too close. We have zoomed in so much that we may lose perspective. As easy as that, we may lose perspective. And doing the homework helps, to zoom out a little bit, to have a panoramic view, and get back in touch with the market. Not just the time frame we are doing, because we are not the only ones who are trading. This market is made by multiple time frames trading or doing their work at the same time. I believe the market is going to go to the upside. You believe the market is going to go to the downside. Other traders think that this is an economy that has been in the bull market for 40 years. Why I'll go to sell? They can keep buying. No, and we are all working at the same time. We all have interests here in different time frames. That's what the homework is for. And also we start to see some things we may lose. What we have from yesterday, for example, the liquidation that happened yesterday, this high question. Opening up here repairs this level here and put the market back to, like to where it started, like it never happened. Where the market opened yesterday, for example, it opened right here. Where the market is right now, it's right there. After all this craziness, nothing has happened. Nothing has happened. How come, right? How crazy is this? And we have actually a 2-day range here. Breaking outside this range to the upside, that's something that's going to negate this breakout here. That actually ends something. If the market takes this high, which is, the odds are not that low, right? This high can be taken because this one is so close and this is an inside bar. This will end the trade that happened here. You have breakout to the downside of this inside bar. And this is just the end of that. Something that may happen here. Remember, this is just odds, right? I'm not saying this is going to happen. We have a breakout of this inside bar here, inside day here. 2 days going to the downside. And if this market takes this high, the market comes back inside this range, it can very well trace towards the opposite side of this range. And this break, if the market takes this high out, I guess the most important thing to me will not be taking these highs out, but taking this one. This one could be a more powerful movement, because as long as the market remains inside this bar, there still could be chances to the downside. Because remember, we have the 4,500 here. This level has been taken 3 times now. Three times this market this level has been taken. The more this level is breaking, this level is getting weaker and weaker. By every time the market trades through this level, the weaker it becomes. The higher the odds, once the market take this level, it trades to the opposite side of this range. Which range is that? Remember? We have, come on. I'm going to remove this mouse now. It's this one here. That's this range here. This is what I am observing here. Now, It is one thing the market being bought from the 50, which we are not at the 50 now, than being bought 50 up here than being bought 50 down here. Right? This is kind of really far from this. Can it happen? Yes, it can happen. It happened a lot of times here in this year, 2021. Anything can happen. Just I would try to keep in touch. I want to see. I want to see now that I mentioned that. Yeah, yes, I want to see where that 50 is in the current contract. That's 44.92. I guess it's way lower. Is it? Yeah, 70. The current contract has this 50 at 70, which I'm going to mark it here. 70. What? Excuse me. $69. 69. 62. Oh. Okay. Huh. That's even more interesting here. It's up here. Not here, but up here. 69. This market is not that far from that level, brother. It's only 10 points. Right now, my focus is this high here. What the market does with this high here. Can the market take this high out? Historically, I have the more issues I had was when the market opened, gave us a spike, right? This is an upside, a spike to the upside, and the market opens inside the spike. Because the opening inside the spike is a neutral. It's not positive. It's not opening upside the spike in the upper side, but it's not negative as well. It's not opening below the spike. And I always have problems here. I always had problems here. Now, I guess the last week or so, or two, maybe two, the opportunities were coming in the first periods of the market. Traders are getting used to that as well. Traders are very used to buy the dips now. You can see that they're buying dips. Every time they're buying dips, the market is just crushing them. Bigger time frame trading is crushing this deep buyers. And that's one way of trading as well, by the way. It's like when I don't know if you play poker. I didn't know how to play poker, but I thought that was very important, so I decided to learn. And I play online poker now. It's very clear when you start playing poker when you don't know. First, I start playing the cards, right? Okay, I have a good card. I have good odds here, or stuff like that. Then you start to think, okay, I have this, what my opponents may have. And then you don't care what you have, right? So how your opponents behave, right? You cannot see, when you play online, you cannot see the face. I guess that's what I call it, that's the expression. That's when I understood what the expression, the poker face, right? Because the less emotions you communicate, the better odds you will have, right? Because professionals, when you grow a little bit on trading, on poker playing, you start to play your opponent. And you don't care too much about what cards you have, but you start to see, and you can see who is getting emotional. You can see who is somebody new. You can see a veteran there playing. So when you have a veteran, you have to be very careful. You have to be very careful what you do. When you see a newbie or somebody, more than a newbie, somebody that's getting emotional, you may have some good opportunities there, right? Because you know you can kind of like feel somebody's bluffing, and that's part of poker. That's part that can very well be applied to trading as well, right? And that's what actually bigger traders do. They trade the traders. That's what is that is what's happening. What was happening yesterday and the day before yesterday. That was very clear. I hope you have noticed that, but that was very clear in the last couple of days. It is going to keep happening. I don't know. I don't know. Nobody knows that. Nobody knows that. I don't know what I was talking about. Gosh. Oh, the opening. Going into the opening. What my focus is here? There's some short inventory. There's nothing here. This inventory has been rebalanced. If the market pays attention to this overnight POC here or half back here, I'm going to let me mark this one just in case. And that's what these levels are for. These levels are not to trade. These levels are to see what the market is doing. And it helps us to identify who is behind the movement. If I see some trading coming here, for example, this is POC or this is overnight, and the market stopping here, like it did here, for example. It tells me who it helps me to identify who's doing this selling here, who's doing what. Let me check the number. What the number was? CPI actually 0.2, forecast 0.2, previous 0.2. It's the same, unchanged. Okay, unchanged. We were talking that the number could have been good because of the reaction. Well, the number is unchanged. No hot, no cold. All right, I got that. Let me see what's going on in the daily. Look at this, man. There is nothing here. And all this spike, there has nothing. There was nothing there. Now, I'm going to take a screenshot of this because this is part of my homework. I'm going to, oh, come on. Oh, gosh. Now I need to take a screenshot of this. This is the beginning of a new day. What's happening with overnight inventory here? Overnight inventory is 100% long. There is some rebalancing here. It was long. There was some rebalancing. It's getting long again. Overnight inventory. Was 100% long. It has been, it was being the balance, and it is getting long again. Simple observations. 2D range. The market is at the center. The market is post open. The market is post. To open inside previous the range, opening inside previous the range, that's chop, the closer to the center, the higher loss of chop and rotation. All right, right there. Do I have anything planned to do opening now? Do I want to be long? Do I want to be short? No, those things. I try to be based on observation. Hey, Gianluca, this is window trade. This is just charting. I use this just for charting. To trade, I have a futures path trading, which gives me the chance to use is trading platform, which is Photon, and this is Photon. Okay. Photon trading. Photon. Okay. Oh my God, this has closed. What I have done? I had to open it again. Oh my God. What I have done here? Gosh. Now I have to download the whole application again. Gosh, what? Ugh. What the hell happened here? Brother, I have to disconnect. I have to remove the Photon Trader. This. I have to do all over again. I'm going to put this. I have to put this thing up, but because there's a glitch here, something happened here. Remove. I need to remove. How to remove programs? How to remove Photon? I'm sorry about this. So just before the opening, god damn. Okay. Oh boy. Let's speak well of Photon trading. What Photon gives me, it gives me the chance to also to have, while they give me the they'll give me, come on, the Photon trader. Also, I can use Rhythmic Trader. I have this, for example. I don't have Photon right now, but I have. They give me the chance to use Photon traders. I have ES here. Well, this is a shame. No one. I mean, I am blind now. Oh no, I cannot do nothing today. Or at least no, until I download my application again. Got this. Hi, this is yesterday's high. The other high is right there. It's very, very close. This high is very questionable. The low is also very questionable. This has been removed. I question the low because it was bought just from the high, the gap right there. You can see here. You can see where it has bought. While it has excess, it has good excess on the low side. It was bought right from the gap, just one tick from this. This is not good to me. But also the high is no good. There is 2 ticks from this one. This range here. This range here. I am watching this 2-day range here. But now I am blind. I will need to cut. I will need to cut the stream short. Because what I'm going to do, I have to remove photon and download it again. I hope I can come back later. I used to do some market that day at 12:30. I'm sorry for this inconvenience. All right. I see you later. Hope I can see you later. Bye bye.